What's going on, guys? Welcome back to another video. So in this one, we're going to be going over everything that you guys need to know going into tomorrow's absolutely insane day. Now, if you've been paying attention to a lot of the news that's been happening or any of the key headlines over the last couple of weeks, there's been a lot of people that have been screaming about the possibility of a Fed pivot. Now, with the data that's actually out there right now, a Fed pivot doesn't actually make a whole lot of sense. And again, with the terminal federal funds rate projections that we have seen, well, even if we were to decrease the pace at which rates were going to increase, well, it really wouldn't change the end result, and we're still going to that 4.5% to 5% terminal federal funds rate, meaning the highest that we would potentially be taking the federal funds rate. But let's get into all this information here. This was a pretty crazy day today. So again, before we get into all of that information, guys, if you do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who actually want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into it over here and take a look at the market, the SPY, the SP 500 ETF here on the daily time frame. So we are hunting this daily cross up here, and we do have potential to get all the way up to this daily 200 exponential moving average. Now, tomorrow, if after the rate hike announcement is announced, and we do see some dovish comments from Powell, and he actually goes on the side of a pivot, even though the data doesn't really suggest that's what the market needs right now, we could see a lot of that money that's been sitting on the sidelines come right back into the market. Now, if we come over here, remember, if we refresh this page really quickly, there is about an 88.8% probability of a 75 basis point rate hike coming tomorrow. The whole market is pretty much projecting a 75 basis point rate hike. Now, if that 75 basis point rate hike then comes with some hawkish statements and Powell saying he's going to stick to his guns, try and loosen up this labor market here, and really get inflation under control with a lot of these hawkish statements that he could come out and make, well, then we could see the market starting to come aggressively back to the downside. But again, tomorrow is going to be very crazy. What we're most likely going to see is a little bit of chop volatility in the morning and then a lot of nothing going into the meeting. And then we're going to see a lot of volatility. Again, guys, there is a lot of money to be made in this market here. And I do want to give a special shout out to one of our members, Shining Wiz. Still going strong on the streak. He's up 64% on his account since the end of September here. Again, guys, we say this a lot, but I can show you guys gains on gains on gains all the time. The system and the results speak for themselves. But if you really want to come in, get that learning, really take your trading seriously, get access to these proprietary trading algorithms that all of our members are using, the alert system, the live streams, the curriculum videos, make sure you guys check out that link down below. It's the best place to come and learn how to trade. Hopefully I see you guys there soon. But taking a look at the dollar over here, dollar pretty much unchanged today. Nothing too crazy was happening. And with the 10-year here, we did see a little bit of an increase on these yields. So there were some bonds being sold off today. Now, yesterday, we were talking about how the Bank of England was going to start selling off those gilts. Remember, they did that quantitative easing period to try and basically get their bond situation back in control and avoid a lot of their pension funds collapsing. And when we come over and take a look at some of these yields today, we did see a little bit of volatility on these 30-year gilts. They shot up, they came down, they shot up again, and then they ended up selling off in terms of the actual yield coming into the end of the day here. So nothing too crazy, but there's a couple of key things that I want to go over with you guys about what's going to be happening with the Fed tomorrow and the other things that we need to be looking for going into the end of this week. Now, remember, it's still earnings season here, so we are going to be seeing a lot of companies reporting their quarterly earnings. So after hours today, we had AMD, Airbnb, tomorrow, CVS, and after hours, we're going to be getting Roku, Qualcomm, Etsy. Again, none of these companies here, unless there's something crazy happens, are going to have a giant effect on the overall market. But what they are going to do is have an effect on all the other companies in their specific sector. So AMD can affect NVIDIA, Micron, and a couple of those other companies. Roku can affect Netflix. Etsy can come in and maybe affect a little bit of Pinterest, some of those other ones. We do have Robinhood after hours tomorrow. After close on Thursday, we have PayPal, Coinbase, Block, which is formerly known as Square, and Friday we have DraftKings. So again, if you are going to be trading and plan on holding anything overnight here, which this market is really not all that set up for swing trading, make sure that you know what date the other companies in that specific sector are reporting their earnings so you don't get caught off guard. Now, the most important thing here that we need to talk about is really what to expect for tomorrow. Now, job openings surged in September despite the Federal Reserve's efforts aimed at loosening up a historically tight labor market that has helped feed the highest inflation readings in 4 decades. Why is this important here? Well, if job openings are surging and the Fed is not loosening the labor market, it doesn't give them the ability to pivot. So what did we see happen with the market today? Well, when this data came out at around 10 a.m., we saw this giant candle coming down. This was manufacturing data right here when this data came out at 9:45 on this candle. Then at 10, we saw another aggressive cascading sell-off there. So what was the market telling us? Well, it showed us that everybody now is starting to get the gist of the fact that the Fed is most likely not going to pivot. Can it still happen? Yeah, it absolutely can. There's a lot of uncertainty going into this meeting, but what the data is showing us right now is that a Fed pivot, a big Fed pivot, and really coming in and getting these dovish statements is pretty unlikely going into tomorrow's meeting. Now, coming down a little bit further, employment openings for the month totaled 10.72 million, well above the FactSet estimate for 9.85 million. Fed policymakers watch the JOLTS report closely for clues about the labor market. The latest numbers are unlikely to sway central bank officials from approving what will likely be the fourth consecutive 0.75 percentage point interest rate increase this week. Basically the same thing that we have said. Now, speaking about the jobs market, we are going to be getting a little bit more insight into the labor market after the Fed is reporting this week. So we're going to be getting the initial jobless claims, continuing claims on Thursday, but Friday is going to be very important. Non-farm payrolls, unemployment rate, and average hourly earnings. When you think about the unemployment rate, if it ends up going up, well, that could give some insight into what the Fed can do on the next meeting that they have. If you see the unemployment rate creeping up, it means the labor market is loosening a little bit. If average hourly earnings start coming down too, it means those workers in the workforce are making a little bit less money. If they are making a little bit less money, well, then they're going to have less money to then spend on goods in the overall economy, limiting some of those demand push pressures on inflation. Now, that's not good for the everyday person, but when you think about the economy here and how markets can react, if that's what we see out of these numbers here, we could end up seeing a little bit of a rebound in markets if tomorrow is an absolute disaster. So guys, that is mainly going to wrap up this update here. Again, when you think about going into the market tomorrow, me personally, I might take a few trades in the morning, but I'm really going to be pretty hands-off going into Powell. Maybe I'll take a few trades. Maybe I won't. I really want to sit this one out. You guys know I've been on a pretty significant green streak, and I really don't want to change the things that I am doing right now. So I'd rather stick to what works. If it's not broke, why fix it? So guys, be careful tomorrow. That's going to wrap up this one. If you did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So hopefully you guys are having a great weekend or excited for the crazy day tomorrow. Other than that, I'll see you guys in the next one. Peace.